Welcome to TalkTickers, your source for earnings call summarization.
Hey there.
Today, we're doing a deep dive into Pony AI Inc. first quarter 2025 earnings conference call.
Yep, the latest numbers and what management's saying.
Exactly. Think of us as your guides, really cutting through the noise to get straight to the most important financial results, operational highlights.
And management insights, directly from the call, just for you, the listener.
Our mission with these deep dives is basically to distill that essential info.
Give you a clear, concise understanding of how they performed and, well, where they say they're headed, based on their words.
Absolutely. So let's not waste any time. Jump right into the numbers reported for Q1 2025. Get that snapshot.
That sounds good. Okay, top line. Total revenues came in at $14 million US.
Okay, 14 million. How does that compare?
That's actually an 11.6% increase compared to the same quarter last year. So some growth there.
Okay, that's the headline. But, where's the real story hiding in these figures? What stood out in the breakdown?
Well, what's particularly noteworthy, I think, is the growth in their robotaxi services. Revenue from that segment saw a really significant jump, reached $1.7 million US.
Okay, 1.7 million. And the growth rate?
That's a remarkable 200.3% increase year over year.
Wow. Okay. Doubling year over year is pretty impressive. And they mentioned within that the fare charging revenue grew even faster. Is that right?
Yes, exactly. They really highlighted that. Within robotaxi services, the revenue directly from fare charging.
So actual paying customers taking rides.
Right. That grew approximately eightfold year over year, 8 times.
Eightfold.
Which, outpaced their Project BOP services within that same segment. So it suggests real traction with actual users paying for rides.
Eightfold growth in fare charging, that really seems to validate their move towards commercial deployment, doesn't it?
It certainly looks that way. Elsewhere in the revenue mix, their Robotruck services revenue. That grew 4.2% year over year to $7.8 million US.
Okay, slower growth there.
And licensing and application revenues were relatively flat, year over year, $4.5 million US.
Right. Now, switching to profitability, gross profit was $2.3 million US.
Yep, resulting in a gross margin of 16.6%.
Okay, 16.6%. That's actually down, isn't it, from Q1 2024?
It is, yeah. Down from 21%. Management attributed this primarily to a change in the mix of their revenue.
Right, more of the lower margin stuff, perhaps.
And increased sales of autonomous domain controllers. Yeah.
Okay, explain that controller point again. Why does selling more controllers hurt the margin percentage?
Right, so think of an autonomous domain controller, the ADC, as like the central brain unit. They develop it and they sell it to partners sometimes.
Okay.
And while that's important for building the ecosystem, getting their tech out there, the margin on selling hardware can often be lower than the margin on providing a service, like the robotaxi rides.
Yeah.
So when that hardware sales part grows relative to the service part, it can pull down the overall gross margin percentage.
That makes sense. Okay. Now, looking at the expense side, operating expenses, they went up significantly.
Yeah, quite a bit year over year. On a GAAP basis, they totaled $58.4 million US. That's a 56.3% increase.
Whoa. And non-GAAP?
Non-GAAP operating expenses were $49.3 million US, which is still 35%.
So what's driving that big jump in spending?
Management explained this increase was primarily driven by, a few things. Their investments in preparing for Gen 7 mass production.
Okay, the new system.
Some one-time share award expenses, likely related to their IPO process, maybe.
Okay.
And increased costs for their R&D employees, salaries, benefits, hiring.
Right. So higher expenses, lower gross margin percentage. I guess the bottom line reflects that.
It does. As a direct result, the net loss for the quarter was $37.9 million US on a GAAP basis.
And non-GAAP?
$28.4 million US non-GAAP net loss.
Okay. And finally, the balance sheet. How much cash do they have on hand?
So their combined cash equivalents, restricted cash, short-term investments, and long-term debt instruments totaled $738.5 million US. That's as of March 31st, 2025.
$738.5 million. How does that compare to the end of last year?
It's down from $825.8 million US at the end of 2024.
Okay, so they used about what, $87 million in the quarter?
Roughly, yeah. And the cash outflow was largely attributed to those Gen 7 R&D efforts we mentioned and getting the supply chain ready for mass production.
Like buying parts ahead of time.
Exactly. Procuring key components ahead of the big push.
Okay, so we've got the snapshot, lower cash reserves, higher operating expenses driven by that investment, but also really strong growth in that key fare charging robotaxi segment.
Right.
Management said 2025 is their year of scaling up. So how do these operational highlights and tech advancements connect to that strategy?
Yeah, that's really the core message from the call, isn't it? They see that strong growth momentum, especially the robotaxi part, as validation for their scaling focus.
That doubling of overall robotaxi revenue.
And especially that eightfold growth in fare charging. They see that as a critical milestone. It shows, in their view, that they're ready for commercial deployment.
And a huge part of enabling that scaling seems to be their new 7th generation, or Gen 7, autonomous driving system. They launched it at the Shanghai Auto Show. Sounds like a big deal.
It really is. They actually described it as a game-changing breakthrough.
Okay, strong words. What's game-changing about it?
Well, the key feature is its use of 100% automotive-grade sensors and components.
Automotive grade, why is that so crucial?
Because it means the system is built for the long haul, a longer life cycle, better reliability, enhanced safety, compared to maybe using components that weren't originally designed for the rigors of automotive use.
Right, makes sense. And how does that help them scale quickly?
The Gen 7 system has a modular architecture.
Modular, meaning
They can adapt it and deploy it relatively quickly across different vehicle platforms. They've already unveiled 3 robotaxi models based on partnerships with major automakers.
like Toyota.
Toyota, yeah, and BIC and GAC. These specific models, built with Gen 7, are expected to enter mass production soon.
And that drives the fleet growth.
That's the plan, driving the fleet size growth towards their target of 1,000 vehicles by the end of this year.
1,000 Gen 7 vehicles by year end. Okay. So the tech enables flexibility, the partnerships provide the car platforms. It sounds like these advancements aren't just about performance, but also really hitting the cost side.
Exactly. Management stressed this point repeatedly. These technological advancements, plus moving towards mass production, they're leading to measurable increases in efficiency, lowering both the upfront capital needed per vehicle,
The CapEx.
right, and the ongoing operational costs, the OpEx.
Let's break down those cost reductions because that's where it gets really interesting for understanding their, path to profitability.
Yeah.
What did they say about the vehicle economics specifically?
Okay, so they mentioned a significant reduction in the total cost per vehicle for Gen 7. That includes the car platform itself, plus their autonomous driving kit, the ADK.
The ADK being their sensor suite and compute.
Basically, yes. And the ADK's bill of materials, the BOM cost.
Yeah.
That's down a massive 70% compared to the previous generation, Gen 6.
70%. Wow. How on earth did they achieve that?
Well, they attributed it to design optimizations.
Yeah.
For instance, get this, they achieved an 80% reduction in the amount of autonomous driving computation needed.
80% less compute.
Yeah. And a 68% reduction in LiDAR costs. They really emphasize that system integration and their scalable production approach are key competitive factors letting them hit these savings.
And 80% reduction in computation needed is 3.
That's wild. How did they manage that while presumably improving performance?
Right. It seems counterintuitive, but it connects directly to their software advancements. The CTO actually went into some detail on this.
Okay.
They've really optimized their AI software using techniques like AI inference optimization, model distillation, improving computational parallelism, and memory efficiency.
Okay, those are technical terms.
Yeah.
But basically making the AI algorithms run much, much more efficiently on the hardware. That's the idea. Think of it as highly specialized ways to get more bang for your buck from the computer chips.
So they're making the AI smarter and leaner, meaning it requires less powerful and therefore cheaper computer hardware to achieve the same or maybe even better results.
Precisely. They specifically noted that their optimized software allows them to use more cost-efficient computing power. They mentioned around 1,160 TOPS total capacity.
And how does that compare?
Well, they contrasted it with many industry peers who, they say, typically require 2,000 to even 5,000 TOPS for similar L4 systems.
So potentially half the compute power needed or even less? That's a huge cost driver.
It absolutely is. Getting more performance out of less compute is a big lever.
And the LiDAR cost reduction. LiDAR, for listeners, that's the key sensor tech using lasers to map the car's surroundings, right?
Exactly. So for Gen 7, they adopted more cost-efficient semi-solid state LiDAR sensors.
Semi-solid state. Does that mean slightly lower performance than the really expensive ones?
Well, individually, these units might have some performance trade-offs compared to, say, the big spinning ones you used to see. But, and this is key, their advanced software algorithms compensate for this.
How?
They claim these algorithms reduce noise points, essentially, irrelevant sensor readings or clutter by up to 30 times.
30 times cleaner, Data.
Effectively,
Yeah.
enhancing the useful data from the sensor. So they get that huge 68% cost reduction while maintaining, they claim, the necessary system performance. It's a combination, smart hardware choice, and very sophisticated software calibration.
Okay, so significant reductions in the core hardware costs, compute, and LiDAR being big ones. What about the operational costs once these Gen 7 vehicles are actually deployed on the road?
Right, this is another area where they highlighted some really dramatic improvements. They've achieved an industry-leading remote assistant-to-vehicle ratio.
Remote assistant.
Yeah, up to 1 to 20.
1 to 20. What was it before?
It's a huge leap from their ratio of just 1 to 3 last year.
Okay, explain that ratio. What does 1 to 20 mean, and why is it so significant?
So a remote assistant is a human operator.
Mhm.
They sit somewhere else, monitoring multiple autonomous vehicles remotely. If a vehicle encounters a really tricky situation, it can't resolve on its own.
Like complex construction or maybe a weird traffic signal.
Exactly. Or dealing with unusual police gestures, things like that.
Yeah.
The remote assistant can provide suggestions or guidance. A 1 to 20 ratio means one single human can effectively oversee 20 autonomous vehicles simultaneously,
Which
dramatically lowers the labor cost per vehicle as they scale up the fleet. It's a huge operational efficiency gain.
And how did they get from 1 to 3 to 1 to 20 in just a year?
They said it comes directly from their proven safety record and the increasing capability of their virtual driver, their AI, to handle more and more scenarios fully autonomously without needing any remote help.
Fewer edge cases requiring human intervention.
Right. Less need for oversight.
And they even mentioned insurance costs being lower.
Yeah, another potentially big operational cost for fleet operators. They stated their commercial insurance premiums are approximately half the typical cost for traditional human-operated taxis.
Half. Why so much lower?
It's validated by insurers, they said, due to their proven safety track record. Very low incident rates, very low claim rates compared to human drivers.
So the data backs up the safety claim enough for insurers to cut the premium in half.
That's what they're saying. Think about that, half the insurance cost just because the autonomous system is demonstrably safer, according to the insurers.
Okay, these operational efficiencies, the 1.20 remote assist ratio, the 50% lower insurance combined with those Gen 7 hardware cost reductions, it really seems designed to accelerate their path to profitability as they scale the fleet, doesn't it?
That's exactly the picture management painted on the call. And they have a clear focus on operational expansion now to leverage this more efficient technology.
Where are they expanding?
Well, they're commercialized operational domains. The areas where people can actually hail rides across major Chinese cities like Beijing, Guangzhou, Shenzhen, and Shanghai. They now span over 2,000 square kilometers combined.
2,000 square kilometers, that's a lot of ground.
It is. And they hit a major regulatory milestone too. In late March, they secured China's first fully driverless commercial robotaxi license.
Fully driverless, no safety driver inside.
Exactly. In Shenzhen's Nanshan district, which is a key economic hub, that's significant. Operating without a human safety driver is a big step operationally and economically.
Absolutely. And are people actually using the service? User adoption?
It seems to be growing. The number of registered users on their Pony Pilot app increased by more than 20% quarter over quarter in Q1 alone.
20% QOQ growth. Okay.
And they expect this user growth to be significantly amplified, potentially, by their new strategic partnership with Tencent.
Ah, Tencent. How does that partnership work? What's the integration?
They're integrating Pony AI's robotaxi services directly into Tencent's Wing mobility services and their map applications.
Nice means.
Which potentially taps into Tencent's absolutely massive user base in China. I mean, we're talking potentially billions of users who might see Pony AI as an option right within the apps they already use.
Huge potential channel for user acquisition and ride volume then.
Potentially, yes.
Yeah.
As they scale the fleet availability.
Okay, that's China. But they also talked about global expansion, right? Their mission is autonomous mobility everywhere.
It is. And they already have some kind of footprint, whether it's R&D or pilots, across Europe, the Middle East, South Korea, and Southeast Asia.
How are they approaching that? Partnerships again?
Strategic alliances seem key here too. Their partnership with Uber, for example. That gives them access via Uber's platform.
Where is that launching?
They expect to launch this year in a key Middle East market. They didn't name it specifically, but said they'd scale to other international markets later through Uber.
Okay. Any others?
They're also collaborating with ComfortDelGro in Singapore. That's a big taxi and transport operator there. They have a joint pilot program running.
And are they making regulatory headway internationally as well? Testing permits and such?
Yes. They mentioned securing an L4 robotaxi testing permit from Luxembourg's Ministry of Mobility.
Luxembourg, interesting.
And they started road testing in Seoul's Gangnam district in Q1 as well.
So these international steps, they're demonstrating the platform's adaptability, positioning for future scaling.
That seems to be the goal. Position them for potential global commercial scaling down the line. Although they were clear their immediate priority, where the scaling is happening now, is China.
Right. You mentioned the CTO earlier discussing the tech, especially the cost savings. Was there anything else notable from their perspective on the technology itself?
Yeah, the CTO also highlighted their Pony World AI-powered world foundation model.
Pony World, what's that?
Think of it as a massive simulation and data generation engine. It's generating over 10 billion kilometers of synthetic test data every week.
10 billion kilometers a week. Why is that important?
Because the scale of this generative data, they argue, breaks through the limitations of traditional imitation learning.
Okay, let's pause there. Imitation learning, generative data. You mentioned the virtual driver earlier. How does this connect to that L2 versus L4 discussion that came up in the Q&A? That seemed important.
It's absolutely crucial for understanding their competitive positioning, and management drew a really sharp distinction here. They talked about recent clarity from Chinese regulators, specifically MIT, distinguishing level 2 driver assist systems.
Like Tesla Autopilot or similar systems?
Right. Distinguishing those from true level 4 autonomous driving, which is what Pony AI does. The notice essentially mandates that manufacturers avoid misleading terms like auto driving for L2 systems.
And they have to emphasize driver responsibility.
Exactly. Make it clear the human is still in charge and needs to pay attention with L2.
And why is this regulatory clarity actually beneficial for Pony AI, which focuses on L4?
Management sees this as very beneficial. It clarifies the distinction for the public, for regulators, for investors. They argued pretty strongly that only L4 truly fulfills the promise for users.
Meaning
Allowing passengers to genuinely relax, nap, work, be productive during a ride. You can't really do that safely with L2, which still requires constant human supervision and readiness to take over.
Okay, that's the user experience difference. What about the technical difference? Is it stark?
According to Pony AI's CTO, yes, very stark. They explained that L2 systems primarily use that imitation learning approach.
So the AI learns by just copying human driving behavior.
Essentially, yes. It watches humans drive and tries to mimic them. But this approach struggles, they say, with understanding why humans make certain decisions. It doesn't grasp the underlying reasoning.
Which means it can be unsafe in complex situations.
Or require frequent human intervention in novel scenarios it hasn't seen explicitly mimicked before. L4, on the other hand, as Pony AI develops it, relies heavily on methods like reinforcement learning.
And that Pony World generative data.
Exactly. Their virtual driver, which is their core AI, is trained extensively on this massive amount of generated data. It effectively teaches itself through trial and error in simulation and, crucially, understands the reasoning behind driving decisions.
So the virtual driver doesn't just copy, it understands the driving task more fundamentally, like cause and effect.
That's the claim. They believe this makes their virtual driver capable of making smarter, safer decisions, ultimately surpassing human safety levels and operating without needing intervention for very long periods.
Do they have proof points for that maturity?
They mentioned that by the end of Q1, their virtual driver had accumulated over 6 million kilometers of drive-based operation in the real world. They view that as strong validation for being ready for large-scale deployment.
Okay. And they made a point about the difficulty of transitioning from L2 to L4.
A very strong point. They argued that the transition from L2's imitation learning approach to L4's reinforcement learning and generative data methodology isn't just a simple software update.
It's not an upgrade path.
They basically said you have to start over. You need to build the whole team from scratch, build a whole new technical foundation and data pipeline. They see this as creating a significant competitive barrier, a moat, for others trying to jump from L2 tech to true L4 capability.
That's a bold claim about their competitive advantage being rooted in their specific development methodology.
It is, yes. Finally, just touching on the CFO's perspective from the call.
Right, the financial outlook.
They reiterated their commitment to disciplined investment, focusing on mass production and deployment, but always with an eye on long-term shareholder value.
They mentioned that revenue volatility back in Q1. Is that expected to continue or?
The CFO explained that the Q1 volatility was mostly driven by that project-based engineering solutions segment.
Right, the non-recurring stuff.
Yeah, which fluctuates by nature. They said it was consistent with historical patterns. They clarified that their overall robotaxi revenue includes both these sometimes volatile project-based services and the faster-growing, more predictable recurring revenue.
From the virtual driver operations and the fare charging.
Exactly.
And they see these non-recurring project revenues as strategic, even if they cause some lumpiness.
Yes. Management stated that while lumpy, these non-recurring revenues, often from partners, are critical. They help enhance and advance the recurring revenue streams down the line. They sort of pave the way for a robust, long-term monetization model.
So using projects to maybe fund tech development or build relationships that lead to recurring ride revenue later.
That seems to be the idea. And they are actively working on initiatives now to reduce that gross margin variability moving forward.
Which likely means shifting the revenue mix more towards those higher margin recurring services as they scale up.
That would make sense, yeah, as the fleet grows and fare charging ramps up.
Okay, so disciplined investment, some expected near-term revenue volatility, but a clear focus on building that more predictable recurring revenue base. What about that decrease in cash reserves we saw earlier? Any concerns there?
The CFO addressed that, confirmed the cash outflow was primarily due to Gen 7 R&D and getting the supply chain ready, buying key components ahead of mass production.
But do they have enough cash?
They stated they believe the current cash reserve, that $738.5 million, is sufficient for their future growth plans. But they also said they'll continue to explore opportunities for sustained support.
So confident for now, but keeping options open.
Seems like it. They sounded quite, positive, even thrilled about moving into mass production and deployment now based on the tech advancements and those efficiency gains they've achieved.
Okay. The Q&A session on these calls often digs into specific points. What were the key takeaways there? Anything new?
Scaling progress was a big one, naturally. They reiterated that mass production for Gen 7 is expected to start in Q2.
So happening now, basically.
Right. And the ramp up is focused on hitting that 1,000 vehicle fleet target by year end. Key to this, they said, are their OEM collaborations, Toyota, GA, BIC.
Making the actual cars.
Ensuring agile component sourcing, stable supply chains, and also leveraging government collaborations to secure the necessary operating licenses in different cities.
And looking beyond this year.
They anticipate even more accelerated scaling in 2026, deploying more vehicles both domestically in China and increasingly internationally.
And on that global strategy, are they pushing hard internationally right away, or is China still the main focus?
No, their clear priority right now is China. Mostly because the regulatory environment there is, frankly, more mature for L4 robotaxis compared to many other parts of the world at the moment.
But they are laying groundwork elsewhere.
Definitely. They're actively leveraging their China experience, their tech, their scale as a foundation to enter new markets strategically, targeting places with strong mobility demand, good infrastructure, and importantly, welcoming regulations.
So international commercialization is still early stage.
Very early stage, yes, but gaining momentum through those partners like Uber and ComfortDelGro and the regulatory progress we mentioned in Luxembourg and South Korea.
Did they touch on the sustainability of that big robotaxi growth again in the Q&A?
Yeah, they emphasized that the growth is really being driven by expanding the fare charging operations, the paid rides in China's tier 1 cities, and also by optimizing operations for different user groups. They basically just reaffirmed that while some revenue volatility from project work will likely persist in the near term.
They're confident in the strong long-term trajectory of the recurring robotaxi business as they scale up that fleet.
Exactly.
And what about that competitive moat based on tech, the L2 versus L4 distinction? Did they elaborate further in the Q&A?
They definitely doubled down on it. They talked about their deep think moment philosophy, really thinking through the architecture leading to that cost-effective hardware plus software design.
Re-emphasizing the efficiency.
Yeah, they re-explained how their AI inference optimization achieves, they claim, 3 times better computing power efficiency than peers. That's what enables the lower cost hardware, the 1160 tops, versus the 2000, 5000 tops needed by others.
Did they give specifics on how they optimize?
They actually did mention some methods, things like improving the fundamental software operators, creating better computational parallelism, boosting memory efficiency. It really underlines their core belief that their specific architectural and software approach gives them a fundamental cost and performance advantage over competitors trying to brute force L4 with just more expensive hardware.
Interesting detail. Finally, Tariffs. Any impact from the U.S.-China situation discussed?
Management addressed this directly. They believe the potential impact of U.S.-China tariffs is actually minimal for them
Why is that?
because the vast majority of their supply chain is domestically sourced within China. They're not relying heavily on imports that might be subject to tariffs.
Have they done anything proactively?
Yes. They said they've also proactively enhanced their supply chain resilience, diversifying suppliers, increasing inventories of key components, partly due to the evolving geopolitical landscape. They basically stated that their Gen 7 mass production plan already accounts for these uncertainties.
So confident they can hit the target despite external factors.
They remain confident in hitting that 1,000 unit Gen 7 fleet target by year end, yes.
Okay, let's take a step back here. For you, the listener, listening to all this, how should you frame all this information from the call? What does this quarter really signal for Pony AI?
To me, this call strongly signals a pivotal shift. It really feels like they're moving decisively from a phase that was primarily focused on R&D, pilots, proofs of concept.
Towards a clear, tangible focus on scaling and commercialization now.
Exactly. And that scaling is being driven very concretely by this new Gen 7 system.
And it's not just about deploying more cars, is it? It's about the underlying economics of those cars finally starting to make sense.
That's the key takeaway, I think. The sheer magnitude of those cost structure improvements they discussed. I mean, that 70% ADK reduction, the jump to a 1.2 remote assist ratio, the 50% lower insurance costs.
These aren't small tweaks.
No, these are not incremental shifts. If they can actually execute on deploying Gen 7 at scale and realize these efficiencies consistently, these are potentially transformative numbers for their path to profitability.
And management wasn't shy about that.
Not at all. They explicitly stated they now have a clear line of sight to break even. That's a strong statement.
Absolutely. You also need to consider the strategic pieces falling into place, right?
Yeah, the expanding operational footprint in China, securing that crucial fully driverless license in Shenzhen, which really de-risks a major operational area, and the potential user acquisition leverage coming from that Tencent partnership.
And globally.
On the global side, yes, it's early days, but those calculated steps via partnerships like Uber and ComfortDelGro, plus tangible regulatory progress in places like Luxembourg and Seoul, it shows a deliberate step-by-step approach to future markets, not just planting flags randomly.
And underpinning all of this is their confidence in the technology's maturity.
Right. Backed by metrics like the over 6 million kilometers driven by the virtual driver, the proven L4 capability, and their strong view on that regulatory clarity distinguishing L4 from L2, acting as a competitive advantage, a moat. These are all key parts of their narrative to investors now.
Finally, you have to remember the financial context.
Which is disciplined investment, driving increased expenses, and yes, decreased cash reserves in the near term. But management stating clearly they believe the current cash is sufficient for their growth needs right now. It's that classic balance, investing heavily today for potentially massive scale and returns tomorrow while managing the burn rate.
All right, now for something a little different. A quick word, what we're about to discuss is strictly, and I mean strictly, for entertainment and discussion purposes only.
That's right. This is absolutely not financial advice. Please do not act on this information.
Okay, with that very important disclaimer out of the way, here's an outrageous but plausible trade idea based specifically on the details reported in this earnings call.
Okay, let's hear it. What's the outrageous idea?
Consider buying out-of-the-money call options on Pony AI, expiring maybe 18 to 24 months out.
Okay, the outrageous part is pretty obvious. It's a highly speculative bet on a future timeline in a very, very early stage industry. High risk. What's the plausible part? Based only on what they said in the call today.
The plausibility comes directly from the potential combined effect, the compounding effect of all those specific operational efficiencies and execution targets they just detailed.
You mean stacking up all those percentage savings?
Exactly. Think about the magnitude of those specific numbers again. That 70% ADK BOM reduction, the 68% LiDAR cost cut, the 80% compute efficiency gain, letting them use cheaper hardware, that huge jump to a 1.20 remote assist ratio, and the 50% lower insurance premiums compared to human taxes.
Plus the regulatory tailwind they see from L4 being distinct from L2.
Right, reinforcing the L4 moat. Add to that their concrete target. 1,000 Gen 7 vehicles deployed by the end of this year, operating with these dramatically improved economics. And remember that 800% growth they already saw in fare charging revenue, even with a smaller fleet.
And management's own words. Clear line of sight to break even.
Precisely. So the plausible pitch here is this. as they actually scale towards and then past that 1,000 vehicle milestone, the operational leverage from all these specific quantifiable cost reductions could start compounding significantly. It might pull their actual break-even point forward much faster than current market models, which might be quite conservative, are accounting for.
Especially given how nascent the industry is and how maybe some analysts aren't fully weighing these very granular but potentially huge operational details yet.
Exactly. So the bet is essentially that these deep dive details we discussed today, the specific tech costs, the operational efficiency numbers, stack up so powerfully at scale that they accelerate the path to profitability way beyond what's currently priced into the stock. This could potentially trigger a significant re-rating before the broader mass market expectations fully catch up.
Plausible based on their numbers and targets, but definitely still outrageous given the execution risk and timelines involved.
Highly speculative, based purely on parsing the specific details presented in this call. And absolutely, 100% not financial advice.
Got it.
Okay, so to wrap up this deep dive then, the core message from Pony AI's Q1 2025 call seems pretty clear. This is a pivotal year.
Yeah, the focus is squarely on scaling that Gen 7 fleet now. They're banking on those significant quantifiable cost reductions and their claimed technological advantages to drive operational efficiency.
While also strategically expanding both domestically in China through key partnerships and licenses and taking those calculated first steps into international markets.
And this was a summary of the key points from Pony AI's Q1 2025 earnings call, brought to you by TalkTickers.
As we've stressed, maybe multiple times now, this is not financial advice.
Nope. Our goal is purely to provide you with information and insights directly from the company's own reporting and management discussion on their call.
So as you consider this information, think about the real implications of those specific cost reduction numbers, the 70% ADK, the 1.20 ratio, the 50% insurance savings. How might those numbers, if achieved at scale, truly change the economics of autonomous mobility?
And ponder that regulatory point they made, distinguishing L4 from L2. Is that developing into a real competitive moat, like they suggest? And how fast can they realistically move on that global expansion front?
Use this deep dive as a starting point. We definitely encourage you to do your own research, dig deeper, and consider all these factors in your own analysis.
Absolutely.
We'll be back soon with another deep dive into the latest earnings calls.